Good morning, everybody, and welcome to this Market Vision 2020 mini-series. This is event number 7 out of 8. I hope you all have enjoyed these events. We've been trying to bring in all the speakers for Market Vision 2020 so that you can get to know them, their style, and so forth. So when you listen to them at the Market Vision 2020 event, you'll have a general sense of how each of them approaches the market. Today, we've got Introduction to RRG with Julius de Kempenaer. He's the director of RRG Research. I do want to make sure you all know that Market Vision 2020 is a week from tomorrow. It's 8 days away. I can't believe it. 2019 is almost in the books, and then we move into 2020. We've had just an exceptional stock market here in the U.S. Got global equities really picking up. So I think the event's going to be very timely. Would love to have you join us. That, again, will be a week from tomorrow, Market Vision 2020. That is Saturday, January 4th. You can go to earningsbeats.com, and there is a tab at the top for Market Vision 2020. You can go right in there, make sure you register and save your seat. But let's get into today's mini-series. Julius de Kempenaer is the creator of RRG, which has been available on Bloomberg since 2011 under the mnemonic RRG. Julius is the founder and director of RRG Research and is based in Amsterdam, the Netherlands. Julius also works as a senior technical analyst at stockcharts.com. His focus on growth of RRG Research is primarily through partnerships with professional data vendors and software developers to make RRGs available to a much wider audience. RRGs are currently available on a number of platforms, but many of you probably know the RRGs from stockcharts.com, where Julius has his own blog. Certainly would recommend that all of you check out Julius's blog. He does talk about the RRGs quite often, how different areas are rotating. It's not just sectors or industry groups or stocks, but it's asset classes, just a tremendous amount of rotational information available in his blog, so please make sure you check that out. Julius completed his studies in economics at the Royal Military Academy in Breda. I'm not going to give the date. I don't want to date my good friend. After several postings in officer ranks in the Dutch Royal Air Force, he moved to the financial sector in 1990, initially as a portfolio manager for Equity and Law Life Assurance, which is now AXA. And most of his experience he gained as a technical and quantitative analyst while with Robico Group. Hopefully I've pronounced that okay. Julius is a regular speaker at international conferences and has multiple appearances on CNBC, Bloomberg Television, and IGTV. He's written many articles on technical analysis, including the aforementioned RRG blog on stockcharts.com. He's been doing that there since July 2014. And in addition to that, since October 1st, just here the last 2 or 3 months, Julius has been the host of Sector Spotlight, which is a weekly live show on Stock Charts TV with updates on sector rotation and anything remotely connected to relative strength and or rotational analysis. Whew, okay, that was a mouthful, Julius. How are you doing today?
Wow, I'm impressed. Did you come up with that for yourself?
Yeah, I got some of it myself. I can't lie though. I have to give my daughter Erin a little credit. I think she may have put some of this together. But I tell you, you've got a storied background in a lot of different areas. And I noticed in the newsletter, and maybe many of our audience saw it as well, we've been putting out little tidbits of information, personal information about all of our speakers and just things, did you know? And you played competitive field hockey for many years, and then you became an umpire for nearly 15 years in what I hear allegedly the strongest field hockey league in the world. Is that right?
Yeah, that's true. Yeah.
Wow. I did not know.
Not a lot of people knew that, but yeah, I did. That's true. I retired from umpiring about 1.5 years ago now.
Okay.
And by the way, my age is 56, so I was the oldest umpire on the pitch until 1.5 years ago. And the reason I stopped was because these guys started running faster, and that was not the case with me. So I decided that it was time to stop before the guys on the pitch, when I walked on the pitch, they are starting shaking their head. No, 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 this guy again. So that unfortunately, I managed to avoid that. So I think I had a good time there. But yeah, that's right. And it was great fun.
So were you like a field hockey RRG where you're the benchmark and everybody was rotating around you and you're just spinning around, trying to follow everybody?
I would love to say that, but the truth is that is not true. I umpired the strongest league in the world, or at least we like to think that we are the strongest league in the world. But I never, for example, I never was an international umpire, and we have a lot of international umpires that go to the Olympics and the World Championships, etc. And I never achieved. I just started umpiring too late. Actually, I was 38 when I started umpiring, so. And to become really, really world level, top class, go to these events, you got to start umpiring when you're like in your 20s, early.
So is this? I mean, field hockey. If it's the strongest league, is this where field hockey began? Like in the Netherlands?
No, it was a good question. I think it started somewhere in the UK, in England. Hockey and bandy, that's where it's coming from. But over time, the Dutch became pretty strong in field hockey. Although we have not won like an Olympic title or a world championship for many, many years. So the women are very strong. The men are struggling. They lost world championships finals. They lost Olympic finals. So, I mean, but we have a lot of foreign players in our league and they all like to come here. And the advantage is because the country is so small, we can have a national league, It's not like in the US when you're, I don't know, playing NFL or the NHL. I think these guys are on the road, like, I don't know, they travel for days and stuff to go play a game. For us, it can all be done in a day. I mean, maximum travel time is about 2 hours, and then you're very far away.
Mm-hmm. Okay.
Anyway, yeah.
All right. Now, another fact is that you recently moved into a nice older home, a boarding stable, and with your wife and daughter, and then you've got 4 horses, 2 dogs, and 1 cat, and partridge in a pear tree.
Tom, tell me all about it. If you would have told me this 5 or 10 years ago, I would say, no, that'll never happen. We lived in the center, literally in the center of Amsterdam. I mean, from my house to Dam Square was 25-minute walk, and you were right downtown central Amsterdam. And we lived in a, like, I don't know, it's like 90 square meters. I don't even know. That's like 1,000 square feet, I believe, something like that. Not very big. But my daughter loved horseback riding, so we started to do that. And my wife is a little bit crazy. She's not going to listen to this. So
no, she's not. I've met her.
No. But she started sort of collecting horses without us having the house that facilitate that type of hobby. And all of a sudden we found ourselves with 3 horses and living in central Amsterdam and having these horses outside, of course, at a boarding stable. And then we said, yeah, well, maybe it's time that we start looking for a new place where we can have these horses at our home. And then, after a long search, we run into this abandoned old horse livery boarding stable that was actually on the market for 9 years. And long story short, we ended up buying it. And now we live in this 25,000 square meters. I don't even know how many acres that is, but it's a ton of land with a huge farmhouse and a huge house and even an indoor arena with 30 stables. So,
wow.
What can I say?
Well, I know where I'm staying when I come to the Netherlands.
You're more than welcome. It's about 50 minutes, 50 from central Amsterdam, so it's not too bad.
Yep. I think all the listeners, all the audience out there can join us too. Sounds like.
Yeah, absolutely.
Come on over.
Plenty.
Yeah.
All right. Let me grab the screen and we start about some serious stuff.
Yeah. While you're doing that, how did you get into RRG? I mean, what was the thing that made you think, hey, I've got something here that I want to do visually. I want to be able to show people visually.
I worked as a sell-side analyst at a trading floor at an investment bank, Kempen & Co. in Amsterdam. And as an analyst, 10, 15 years ago, or maybe even longer, but the investment banking industry was very simple. You had salespeople who had to sell stuff. You had research analysts who had to produce research reports that the sell side people, the salespeople had to sell, and you had traders who had to execute the orders and make sure that the client got the best price. So the routine was that the analyst would write a report, the salesman would present the report to the clients, all institutional investors, and if the institutional investors liked what you were saying, you would get the order and could make money on the commission of trading those stocks. Now, obviously, that field is super competitive, so you had to stand out. And I was covering the European stock market, which was 600 stocks in 18 sectors, and you know, writing my reports and stuff, and using relative strength as my tool, as my weapon of choice, so to say. And I always got the question, what are your strongest, what are your best 5 stocks or your best 5 sectors? And I couldn't really answer that question because I was, you know, I was doing the relative strength. So I wanted some sort of a ranking system. Got that. We'll talk about that later. I got a few slides prepared that will show that. And I had that, and then, you know, the people started talking about it, and I had a tabular format. But as a technician, you want to visualize. You want to see stuff in front of your eyes, and you don't want it to be tabular. And over time, that evolved into what is now known as a relative rotation graph. So it was, for me, it was basically the ultimate background was my wish, my desire to come up with something that my competition, the other technical analysts that I was competing with, or the other research analysts at the other investment banks, did not have. And that's what it is. I mean, I remember very vividly that we were sent on a course one day because everybody had to sell stuff, and I'm a terrible salesman. And the teacher, he was Scottish, and he had a very thick accent. And he, at one stage, he said, it was about how do you grab the attention of your audience, and the answer was, you gotta make the facts sizzle. I was like, all right, let's try to do that. And so I was trying to make the facts sizzle, and you know, it wasn't born. RRGs weren't born overnight, or you know, you don't sit down at the kitchen table one day and think, let's create something. That just evolves over time, doing your research and doing your work. And so there you go. It was trying to stand out from the crowd, so to say. And I think that is what they still do. They still are, although they're launched on Bloomberg since 2011, I produced them in my own research since 2004, 2005, I think. And that's, you know, let's pick 2011. That's already 8-9 years that they are, you know, visible and available to a bigger audience, but they're still new. I bet that out of the participants today, there are still a few people who've never seen an RRG. So so there you go. There's still a lot of work to do explaining it.
All right. Well, I do want to just let everybody know before you get started explaining the RRGs. We do have the ability to ask Julius some questions. So there is a Q&A. Go ahead and click on the Q&A and ask your question. Type in your question. I'll monitor those throughout the presentation. And Julius, as you're going along, if I see a question that kind of you know, fits in with your current discussion, maybe I'll interrupt you and just try and get some clarification. Otherwise, I'll save the questions for the end. Does that sound okay with you?
Yeah, feel free to interrupt. We've done this before. Always works well. So I'll just start talking through my slides. And you know, if you feel if I need to speed up, slow down, or explain something a little bit more, then feel free to interrupt me. If any questions come in that make sense at that point in the presentation, and I'm happy to take them right away. And if not, if it's like something totally different or not attached to what I'm talking at that time, I'm happy to take it at the end of the presentation.
Okay.
Or via email.
Yeah, I'll let you keep your flow. So why don't you tell everybody what are these RRGs?
Yeah, let's start with a little bit of groundwork on that. And as I said, I wanted to stand out, and for me, it's all about investing. Is all about I usually use a top-down approach, and I'd like to visualize this as an investor's decision tree. So you got a big bag of money, big bag of dollars, and then you need to make a lot of choices. And one of these choices, for example, would be to decide whether you're going to invest in bonds or in equities. Well, okay, that's a fair decision. That's a fair question. What you can do is just make a comparison between bonds and equities. Yeah, you can take SPY and compare it to IEF, and I'm sure because you're the host that everybody is aware of relative strength. So you would probably draw a chart of TLT or IEF against SPY to answer this question. Now, you've got bonds and equities in various regions. So the next level would be, do we need to be in US bonds, European bonds, Asian bonds, and the same for equities, US, Europe, Asia. So you can imagine that your investment tree, your decision tree will grow when you go deeper into your investment tree and the number of decisions becomes larger and larger. Now, as I said, the weapon of choice is relative strength, because I think that's the only tool in the technical toolkit that helps us distinguish between A or B. And whether that's a sector, a stock, or an ETF, or something, doesn't really matter. Relative strength is the only tool in our toolkit that helps us make a choice between security A and security B. And the good thing is that, and what we're looking at right now is XLY, is the discretionary sector versus SPY. So we're looking at the price of XLY, and we're looking at the ratio chart, I'm sure everybody's aware of XLY versus SPY. Now, the good thing is that once we have this ratio chart, we can apply pretty much all tools in the technical toolkit, following trends, plotting support and resistance. And the reason I've got this chart up here to basically show or underscore that there are trends in play in relative strength, like here, this blue line goes up, and it means that XLY during that period was doing better than SPY. Now, this whole period from October 15 to October 17, that's 2 years, XLY was underperforming SPY. So you better stay away there. It simply means that in this universe of US sectors, during that time, there were other sectors that were doing better than XLY. And the cool thing is that it went up in price. So it wasn't a bad investment. It's just that there were other sectors that went up faster in price. So you can use your technical toolkit to analyze this ratio line. You will run into a few problems because the level of that ratio line, it's just 0.39 right now, that numerical value doesn't tell me much because it's completely dependent on where this sector is trading at the moment versus SPY. So you can have a situation where 0.39, and it looks like as if it's starting to go down or is going down, versus another sector which may be at 0.15, but it's going up. Then we like the one that's at 0.15 because it's going up, and we don't like the one at 0.39 because it's going down. So that numerical value I cannot really use. So I need to find something to analyze those trends. Now, the second problem with these ratio charts is that it is always a one-on-one comparison. You can look at discretionary versus SPY, you can look at staples versus SPY, you can look at technology versus SPY, but it's always that one-on-one comparison, which doesn't paint you the whole picture. It doesn't give you the overview of the whole market. Now, there is a tool on stock charts called perf charts. These are performance charts. Many systems do have them. And this is how a lot of people plot performances of multiple instruments on one chart. And I find this an awful chart. This is the reason why I started thinking about a different visualization, because this shows you the performance over 200 days for 11 sectors. And it's literally doing that. It's showing the performance over 200 days. Anchored to 200 days ago. I mean, you can see technology is over here, energy is over here. I don't even know how to look. You know, you got to look at the colors here to find where it is, and then I find it very difficult to distinguish various trends. Some trends are longer, some trends are shorter. It's, for me, it's impossible to actually spot that on this type of charts. So I call this a spaghetti chart. It becomes messy and it's hard to see trends. Now, the thing is, if you work with relative strength, and I've listed here, and this is the 10 US sectors. I know that there are 11 now, but 10 is just a very easy number to work with, especially for my combination, and especially because this chart, this slide took a lot of time to prepare, and if I need to add another sector, you know, it's another lot of time to fix that. But what I want to show you is that if you have these 10 sectors, and you have what you need to do, like have it as a league table. Yeah, there you go. Then you have 10 sectors across the top and 10 sectors down the vertical. If you want to do it properly, it means that you have like 100 possible combinations in a 10 sector universe. Think about it. Doing a ratio line with 10 sectors, you got 10 by 10 possible combinations. Now, energy versus energy obviously is one, so you don't really have to look at that. Or, you know, XLK versus XLK, you don't have to look at that, which means that the whole diagonal, these 10 combinations, we don't need to look at, because that's one, yeah? Still leaves us with 90 potential combinations. But when you've looked at financials versus technology, you've already seen technology versus financials, because that's the reverse. That's the inverse of that relationship. So if you've done the analysis for one, you know the other because it's the inverse. You know, so, you know, utility versus energy is energy versus utility. That's the same. So that lower half can also go, which means that we are stuck with 45 possible combinations that we would need to analyze to get the proper picture of what's going on in this universe of sectors. You can actually, there's a formula for that. So if you have the 10 gigs level 1, that's usually the 10 or 11 sectors now that we work with. That's 10 by 10 is 100, minus the number of sectors in the universe is 90, divided by 2 means 45 combinations. If you go down to, let's say, the 24 industry groups, that means 576 possible combinations. Again, subtract the 24 elements in the universe, that leaves you with 552, and you can divide that by 2, which means that you got 276 possible combinations. And you can imagine that when you say the 30 Dow stocks, or the OEX, the S&P 100, let alone the S&P 500, the number of possible combinations is ballooning. Now, even if you would make all those charts and look at all those charts in a normalized fashion, which I'm going to show you later on how I do that, it still means that you have to flip through 45 or 276 or maybe even more individual charts. And this is where my military background comes in, because as I said, the classic relative strength analysis is always based on one-on-one comparisons. And to get a bigger view, to get broader context is a lot more difficult, but it's so super important. In military terms, people often speak about situational awareness or overwatch, and you actually have an overwatch. Almost every military operation has an overwatch unit. I used to be an Air Force officer, and we had AWACS planes that were flying very high with these big radar scales on top of the plane, these big Boeings, and they would paint the picture. They would paint the radar picture of the airspace below them. But the image in the background is an infantry unit, an Overwatch unit with snipers and spotters, usually at high ground, overviewing the battlefield where the other units are operating. And these guys are in touch with the units on the battlefield and telling them where to go, where not to go, where the enemy is, etc., etc. So these people and the AWACS planes are providing the battle troops or the fighter jets with the bigger picture, with the context, with the situational awareness. And that is what an RRG is trying to do. It will try to give you the big picture in one picture. It will try to help you to paint the entire universe for you to build on and use in your own workflow and you know, use it to your advantage. Now, this is how it looks. This is an actual RRG that I plotted just before the show, and it shows you the 11 sectors versus the SPY benchmark. As you see, it's a four quadrant plot based on a scatter plot of 4 quadrants. Now, what does that mean? What does these lines, what do these axes mean? So the RRG shows you trends in relative strength or trends in performance of multiple securities in a universe against one benchmark and against each other, especially that last bit, and against each other is very important. Now, be very careful. They do not show relative performance as such. They show trends in relative strength. If you would create that with just performance, it would fly all over the place because, you know, you're looking at a lot of noise, and that's where the indicators on the axis come into play. This is again the consumer discretionary, the XLY chart that we had before with the relative strength, but now we have the what I call RRG lines plotted below it. And these are the indicators that I build over time, which help me to overcome that problem of this 0.39 that I cannot compare with all the other numbers in the universe. So the RS ratio is a normalized measure of a trend in relative strength. And very roughly, when it's above 100, the trend is up. When it's below 100, the trend is down. And there's a little bit of a story here, because this was the first indicator, the first tool that I used when I wanted to answer that question that I always got from these institutional investors: what are your best 5 stocks, or what are your best 5 sectors? And this was the RS ratio that I used to create that ranking. And I remember very, very well in 2000, the dot-com bubble, so it's like 2000 somewhere, that RRG did not exist. It was just that RS ratio that I had. And technology was off the charts. It was way up there. And obviously, in my ranking system, technology was the #1 sector. And as we all know, trend following systems need a little bit of time to adapt to a new situation. And somewhere in 2000, when tech really started to drop, and it was still the strongest sector in my table, I got an email from an Italian investor saying, "Hey, Julius, this time your system didn't work so well." And I just had to like, okay, yeah, maybe you're right. So I needed I was looking for an early warning system. And that's when I came up with what is now known as the JDK-RS momentum, which is essentially an algorithm that normalizes relative momentum in that trend. So I was using the features of rate of change, which we all know is a leading indicator, to work as an early warning system on my trend measure. And I used that for ages. These were the 2 measures that I had. No graphical, just this was the graph that I was looking at. And I always had to do, and I was able to compare all these stocks and sectors with each other, but it was always that one-on-one comparison. Which is good and it's cool and it helps you, but it didn't give me that big picture. And that is when I started to actually, and this was literally happened at some, you know, when you have a table and you start playing around in Excel. I think it was Excel 2003, probably very old version. And I had this table that I put in my research, and I always used to rank the columns based on momentum or ratio, and I was playing with it. And at some stage, I decided, let's see what happens if you know, use different graphical formats. And I just clicked on the scatter plot in Excel, and hey, what's that? That looks pretty good. And you know, from there onwards, I started actually working more on it and working out that visualization. Now, what we see here is the basic scatter plot. On the horizontal axis is the RS ratio. That's the red line that you just saw in the chart. And the vertical axis is the RS momentum, which is the green line that you just saw in the chart. Now, if we plot a number of elements in a universe on this graph, what will happen is that in the top right-hand graph, you will find, let's talk about sectors just to make it easier. You will find the sectors that have a strong RS ratio, which means that they are in a relative uptrend versus the benchmark. And that uptrend is still being pushed higher by strong momentum. That's leading. Now, because RS momentum is based on rate of change, the first thing that will happen is that that rate of change will fall, and that sector will drop into the weakening quadrant. That is a situation where the relative trend is still up, but it's losing strength. So it's not being pushed higher anymore. It's still good, but not being pushed higher. Now, if that deterioration of momentum, of RS momentum continues, it will eventually push that sector into the lagging quadrant. And that's where we'll have the sectors that are in a relative downtrend versus the benchmark. And that downtrend is being pushed further down by weak momentum. And then obviously, at some stage, the first thing that will happen is that your momentum will start to pick up. And that means that the downtrend, the relative downtrend is still in play, but it's not being pushed further down. And if that improvement continues, then eventually it will rotate into the leading quadrant again, and you will get that rotational nature. And when I worked this out, and when I started plotting, and when I started seeing that these sectors were moving around, and they were actually moving around in a clockwise direction, that was really like an aha moment for me, like, whoa, because everybody was always talking about sector rotation. But until then, nobody was ever able to show me that these sectors were actually rotating around the center, and they were rotating in a clockwise fashion. And that's how RRG got born. Let's move to a live chart here and swap away from the so here is the RRG version on stockcharts.com. By the way, this is the blog that I wrote this morning about the energy sector. If there's a little bit of time later on, we can come back to this. And what I always like to do is bring up the S&P sectors. This is the chart that we just had as an image in the PowerPoint. And you can see how these sectors are spread out over this canvas, over this universe. And because it is relative, there always has to be a certain division between leading, lagging, weakening, and improving. It's pretty rare that there is nothing in weakening as it is right now, and only one in improving. So that means that the universe is pretty well split. And from this, I can immediately read that the current market is driven by healthcare, financials, and technology. These are the only three that are in leading, and that we should stay away from real estate, utilities, staples, discretionary, and materials. And then we've got industrials and communication services. They are probably at 100. And then there is energy, which is quite interesting rotation at the moment. We'll get to that later, but it's still detached from the rest of the universe. Now, the chart allows you to actually look at it right now, but as I told you, we are visually people, and we like to show how stuff moves And the good stuff is that if we click animate, you will actually see that rotation over time. And you see that there is a clockwise rotation going on. We can also do that by, or show that by extending the tails to a maximum of 30 weeks. That is a bit messy, I agree, but what it shows you is that rotational nature and that clockwise rotational nature that's going on. If you highlight a tail in the table, you will actually see how that rotation worked over, in this case, the last 30 weeks. And you can very easily zoom in on the rotation of the various sectors. So this chart gives you a high-level overview of your, let's say, battlefield, and give you an idea how this sector is positioned versus the benchmark. And the center of the chart here is the benchmark, but also how it is positioned versus the other sectors. So if we do it like this and we make them all visible again, I can easily say that technology is stronger than healthcare because technology is higher on the RS ratio axis. And I could also say that staples is better than real estate, because staples, they're both in lagging, but staples is higher on the RS ratio level. So in terms of trends, this trend is very weak. And it's now getting very exciting with energy, because it looks as if energy is going to leave the last position in the universe, and it'll be taken over by real estate. Now there is a lot more about these rotations that we can talk about, and please, if you go to the blogs, you always find me explaining how rotations work, and if you go back in the history of the blog, there's a lot of educational stuff there. But what it helps you is get the big picture in one picture. And what I always like to do is, from this picture, go to a normal chart, because I know that there are a lot of people out there who want to sell trading systems or ideas or software, or doesn't matter, and they will tell you that this is the best system in the world and you don't need anything else. I have seen them come and go while I was a professional analyst at a bank. I always give these guys 20 minutes courtesy time, and then I would shove it in my lowest drawer and never look at it again, because I have my own routine. I have my own way of looking at things. And I'm sure you have your own way of looking at things. And I don't want to interrupt with that. The only thing that RRG wants to do is help you become more efficient and get a better big picture overview. And that is, here is the RRG. And what you then do is you just, well, let's look at XLK, for example. You look at the chart of XLK. Now, this is my setup with the I call this raw relative strength, which is the ratio line, and the RRG lines. But you can imagine that you can have, I think, is the Tom Bowley's chart style still on here? Yeah, there you go. So Tom Bowley would probably look at it like this, a little bit bigger. But you can see that this is how Tom would look at XLK at the moment. Now, that is what I want to do, is actually bring it into your own workflow. And I can do that very easily. I can look at XLK, say, hey, that still looks good. RRG line's moving higher, trending up. That's pretty cool. Now let's look at the bad one, which is XLRE. And I see XLRE and I see, oh, the price is still good, but relative is awful. And it's deteriorating. It started lower highs, lower lows, and here are my RRG lines going down. So in this way, I can work from my big picture and zoom in on my more granular price chart with the indicators that I like. Now, you may have noticed that my stuff is on weekly charts. You can run RRGs also on dailies. As a matter of fact, you can run them on any time frame you like. On stock charts, we have daily and weeklies available, but you can run it on 5 minute, 1 minute, whatever charts if your system allows it. And you will see a different type of rotation, but what is cool is you see that XLK here also is in the leading quadrant. So technology is strong on the weekly and on the daily. I could go on forever, but what I want to show you, and we'll talk about that during the Market Vision 2020 event. I'll talk a little bit more about it. I wanted to save like the interpretation and rules of thumb and how to use them for the actual event itself. So there's a little bit on your wish list. Don't want to give it all away right away. But the thing that I want to share here is that you can run RRGs on multiple universes. So here is one that shows you the rotation of various asset classes. Very interesting. Stocks is the only one in leading. The rest is in lagging, and commodities are right about at 100. But you can also go one level lower. So we saw that technology was really strong. We can dive in to the members of the technology sector and compare them to XLK, to the technology benchmark, and do the same. I can now, and you see that this is now again spread out. So you've got good stocks, you've got bad stocks, you've got stocks that are improving and stocks that are weakening. And I can again walk through all these individual stocks. And I think, oh, AMD looks really nice. Let's look at AMD. Well, no surprise here. That is actually very, very nice. And the only thing I need to do is change SPY to XLK to have it properly positioned. So you can see here at 109 and probably 109. Well, here you go. Here is your 109 and here is your 106 something, which is right there. Can't really read it. It's overlapping. But this dot here corresponds with the two observations that you see here. And this helps you to distinguish, if you want to invest into the technology sector, which stocks are interesting to look at if you don't want to buy the ETF, but you want to be a little bit more adventurous and trade in individual stocks. Last thing that I want to, yeah.
On this chart, how about, I'm looking over at your actual price chart, and I see AMD from August of 2019 through October, the price chart was actually going down, and it came down to a support level. Right in there. And so I'm wondering, on your RRG, what would AMD have looked like? Can you stretch the tails out, or can you move the time back?
We can do that. So let's see.
Just so everybody can see, when a stock looks really healthy, when it pulls back, what does it do on the RRG?
So that is, let's say, start of August 2019. Now watch this. Here is the date. And the date is the endpoint of the chart. So we walk back to August 2019. Here you go. So here is, in the run up to August, it drops from leading into weakening. And this is August 12. And we have, this is 5, so this is 12. And then you see that this relative strength line is going down a little bit, dragging these down. And we see that happening. And then we drop into lagging, and we're now October 14. And that's here. And this is where you see that it is trend following. So it looks as if we're going into a downtrend. And I'm sure that if we would cut off the chart here and you would look at that relative line, we're breaking below support, etc. Well, that didn't work out. It started to turn back up very rapidly. And November 18, we move back. That's here. And you're back on track with your relative going above. And we pick it up in this region here. And it continues its relative uptrend.
I was just going to say, I know you and I have had a lot of talks about this, and you've made it clear in a number of your presentations in the past that you use the RRGs to identify opportunities, but you go to the charts to actually make your trades.
100%.
And I thought that this one was really interesting because AMD, when you see it turn red and go into that lagging quadrant on the chart, it never breaks below the prior support level. So when you're looking at it, right there, you've got the AMD. Now, if I just looked at the RRG and I couldn't look at a price chart, that would probably tell me to sell. But when I go back over and I'm looking, if you're following AMD in the uptrend that it was in 2019, when it pulls back at the beginning of October, it doesn't take out that low from back in August. So the price support holds. So I think in that case, and you know, correct me if you think differently, but I would look at this and I would say, well, you know, it's starting to show some relative weakness, but let me see if it holds this price support. If it doesn't, then I would get out. But in this case, it holds, and it actually turns around very rapidly and goes back into the leading quadrant again.
Yeah. Also, just beware. It's all relative, and this doesn't mean that AMD as such is bad or weak. It is just weaker than other stocks in this universe. You know, so I'm not sure which one this is here that is moving almost opposite. This one here. Oh, so NVIDIA at that time, you know, moved almost opposite of it. So let's bring NVIDIA into the game here. And we're August. Here you go. So here you see that the relative of NVIDIA is just picking up. And that is, you know, at that time, I would probably have said, you know, a pair trade would be long NVIDIA, short AMD as a short-term pair trade, just to play the improvement of NVIDIA over AMD. But as you said, we've done this a lot of times, and your horizon is a lot shorter than mine. So you would probably look at the daily rotation of AMD and maybe NVIDIA. Let's go back to AMD and we'll answer your question again at that time. So where is AMD? AMD is here. And what did we say? August 12th, right?
Mm-hmm.
So here is your rotation. Oh, that's a very weak one. It's going from, this is pretty exceptional, going from leading straight through back into improving and then into lagging. Usually it rotates through weakening. So we have this here in the run up to August 21 and then 22 it starts, and we probably have to change this into a daily as well to be fair. Where's August 22? We're about here. And this is where the trend starts to decline. So this is like a month, 5 weeks going down of weak relative strength. And that is onto, so we're August, September, and then here in September, it starts to improve again. And that is somewhere here. You see, this is the run up where the green one, it's moving up on the green axis. That is this one, it's this improvement. But we're still below 100 on the red. And then we continue, we drop down again. That is this one, it drops back below 100 again. So we stay on the left-hand side of the plot. And then we make the move. These are these little moves. And then we go here, and this is October 21st. That is here when they both cross above 100 again. And that's here on the relative strength. So the daily gives you an earlier signal to pick it up. You know, so the difference between daily and weekly is that the daily is much faster in picking up these trends. The counter or the caveat is that, you know, these trends usually change a lot faster than the weeklies. So so there you go. This is but you're right, you know, I always go from the RRG to the chart because price is king, and you can't buy relative strength and you can't sell relative strength. You got to buy and sell price. And the RRG is trying to provide you with a longer term overview of the whole universe. And what I support people to do is actually use an RRG, get a high level overview, find interesting symbols, whether that's sectors, stocks, currencies, I don't know, whatever, and then put it into their own workflow, put it into their, I don't know, trend following, pattern recognition, MACD RSI, rules-based trading. I don't know, whatever. Doesn't matter. I mean, I'm completely agnostic to what people do with their findings from RRG. So there is also no ground set of rules. There's no trading system. There's no exact way to use RRG. There are many ways to use RRG, and I've seen people use RRG in ways that I would never have thought of. So you know, it's a visualization tool, and that's what it was meant to be.
Yeah, I do a lot of relative strength work, and a lot of what we do at Earnings Beats revolves around relative strength. And so I've tried to, in my work, I've realized that when a stock is consolidating, so it's had a big run up, it's a leader, it's showing relative strength. On the RRG, it would be up in the leading quadrant. I've noticed that when these stocks go through a period of consolidation, because stocks don't go up every day, I mean, they don't always lead, that when they go through these extended periods of consolidation, I would say, AMD was in a really extended period from probably June all the way through September into October, that you do see these relative strength, the relative strength deteriorate. And if I was looking at AMD on the daily chart, or on the daily RRG, I definitely would not have been impressed back in August and September when it was over on the left-hand side. But when I look at the chart, it's still consolidating. We haven't broken down. We haven't lost support. And so I'm still trying to find that perfect system. I mean, nothing's perfect, but that better system of timing these, using both.
Yeah, but I mean, that's totally fine, and that's totally cool. The only thing that I can say about that is that you're talking about this period here, like, from August to October, where relative strength is declining, but we all know that, and we've seen the weekly relative strength that's still in general trending upwards. So we've got this big consolidation of, I don't know, 2 months here, in which maybe AMD is not the best stock, and that is exactly what RRG is showing you, that it is not the best stock in the universe. At that time, during this period, there were other stocks in this universe that were doing better than AMD. And again, it's not saying that AMD is a bad stock. There are just others in this universe that are performing better, that are showing a stronger relative trend. But I can completely understand if, like you guys at Earnings Beats have a list of stocks that you like because of their earnings, that you may decide, it's not dropping below support, and we look at the long-term trend, and that's still good. So this little hiccup here, we're fine. And maybe some other stocks during that period that were showing better relative strength than AMD, but they were not ticking the boxes that you want to see from an earnings perspective, and that's fine. That's totally fine.
Yep. There was a question that came in. Someone asked if or is momentum measured against the benchmark as well? And I think that was while we were looking at this AMD chart.
Yeah.
But the benchmark in this case is your XLK.
Is XLK, yeah. Well, you can play with this actually. The answer is yes. It's measured against the benchmark as well. So that's the short answer. But if we play with benchmarks, so these are the stocks inside XLK versus XLK. So this should be a spread out universe. Now, if we change XLK, let's put it to weekly, so we got the longer term trends, and we put this to the actual. So this is right now versus XLK here. So this is right now versus XLK. See what happens if we use SPY. You see, it has shifted a little bit to the top right, which is logical because the whole sector is doing better. So if you measure it against SPY, you would expect this stuff to be a little bit shifted to the top right because the whole sector is outperforming. The best way to show this probably will be if I add, I'm not sure if that will work if we are not reaching the maximum. Let's try if we add XLK to this list. No, we're full. Okay, I'm gonna just randomly delete a number of ticker symbols and then add XLK. Now XLK is here. Now you see that XLK, so now the benchmark is here. XLK is right here, which is logical because XLK is in the leading quadrant versus SPY. And you see the individual stocks rotating around XLK and XLK rotating around the benchmark. Maybe this is too much to grab right now. So here you see, this is in April 2019. You see how strong this is shifted, this universe? This is now all in the top right because that was a very strong period. Let's bring up XLK here. In April, saying right? April 2019. Oh, this needs to be 19 April. So here, this is your super strong period in XLK versus the benchmark. 18 April here. This bit here. So this is a short rally in XLK, and you see that everything is now moving to the top right hand corner because technology is the strongest sector at that time. And if I now put XLK to the benchmark, you will see that everything shifts to the lower left. You see? Now you got a lot more in weakening and in lagging. So you can play with these positioning type stuff. And let's wrap it up, Tom, with using one more benchmark trick, as I like to call it, and that is $1. And $1 is a benchmark that is always the same. It's always the number one, and it will give you a picture much more. It's now relative to 1, so it's absolute in absolute terms, and you will see that they now all move together like a school of fish, and now it's very strong. If you would put, let's take a very weak sector like real estate at the moment, and we put real estate. See, real estate now versus real estate is spread out evenly. If we look at the real estate stocks versus $1, they're all pointing to the lower right, and this is the majority. So there are only a few outliers in real estate that might be worthwhile looking at. So the benchmark is pretty crucial in how this RRG is drawn. And I can talk probably another half an hour on using various benchmarks and what the impact is and how you can combine them. But let's save that for another time.
All right, we do have a couple questions. Maybe you can answer these.
Yeah, sure.
First one, this one's over my head. Maybe you can get it. How are the quantities in the ordinate and abscissa of the RRG plot normalized to get 100?
Yeah, next question. That's what we like to keep on the wraps because that is what our IP is in combination with the visualization. So that's where a lot of work is in there and how it's done, and there are various ways to do it. I think we found a way to actually measure the trends in a normalized way. How do I say this? It normalizes it versus the benchmark, but also versus all the other elements in the universe. And that's what makes it so powerful, and that's why it makes this visualization possible. So there you go. I can't go into any more real details about it, but yeah, that's it.
Yeah, you can't give away the recipe.
Not really, no.
All right, another question. Can I use RRG as a leading indicator for entry into stocks? I think that's kind of pointing out.
Yeah, that's one of the things that I want to talk about in my introduction for Market Vision. So there are, as I said, there are no fixed trading rules. There are no ground rules. There's not a real set of rules that is available. But over the years, we've found some, let's call it rules of thumb, guidelines that we like to give people and everything has to do with what your investment horizon is and how aggressive you want to be. But I'll talk about that in the Market Vision event.
Okay. Basically, the last one was thanks. Someone commented they have a much better understanding of how the RRG works now. So hopefully
Cool.
everybody's got a little bit better understanding. And I don't know if you can point everybody to your blog over at Stock Charts.
Yep. Let's do that. That's over here. It's the RRG blog. Last articles written today about the energy sector. About this, if you go in there and you read about it, you'll find what I call this a hook, and the reason why I call that, it's also the interaction between dailies and weeklies. If you go all the way down, you can just leave your email address and you'll get a little message when a new article is posted. And I also write usually every Thursday on the Don't Ignore This Chart blog, and this one is of yesterday, and I like to recycle my work. So this is an energy stock in the energy sector. So yesterday I found this energy stock that I think was interesting. So today I decided to write an RRG blog on the sector as such. And I think if you read a number of these articles, you will quickly pick up the way how I interact between RRG and normal charts, and how I like to compare the two and work with daily versus weekly, etc., etc.
Well, it is absolutely fascinating. And I do want to thank you for taking your time out, especially over the holidays, to come in and give everybody a little bit of a instructional webinar so that they have a little bit better handle on the RRGs for whatever they do during regular trading day and maybe on the weekend when they're doing their analysis, but also as a lead into your Market Vision 2020 talk that you're going to be having as part of the huge event that we have next Saturday.
Yeah, looking forward. By the way, if I didn't answer any questions, or if you have any questions, or you rewatch this show when you come up, feel free to send me an email. I can't promise to reply to everything, but I'm usually pretty good at it, I have to say. Maybe not the next day, but almost all people that write to me will get an answer. So, if you have any questions, feel like any questions, just don't hesitate, just shoot me a message. And I'll try to answer whenever I can.
Sounds good. Well, thanks, Julius. Appreciate you coming in. And again, anybody who would like to attend Market Vision 2020, make sure you go to earningsbeats.com. And at the top, there'll be a tab, Market Vision 2020. Just click on that tab and make sure you get registered and have your seat saved for this event. It's going to be special. We've got John Murphy coming in as the keynote speaker. So John's going to be giving you his take on a lot of different areas, the dollar, commodities, different asset classes, what he sees leading in 2020. And it actually, in talking to John, I know he's looking for a lot of different changes in 2020 versus what we saw in 2019. So it's not going to be a situation, and I tend to agree with him. I don't think it's a situation where you just play whatever you played in 2019 and let it go. And I think as Julius was showing you too with the rotation, there's constantly rotation going on within a bull market. So what's working in 2019, not likely to be the same thing that works in 2020. So you definitely want to check out Market Vision 2020, get our latest thoughts. A lot of my friends and colleagues from Stock Charts are going to be joining us, and it's going to be a day of great fun and some great prognosticating, I'm sure. So with that, again, want to thank everybody for stopping by. Thanks to Julius for coming in doing this special presentation. And we look forward to seeing all of you at Market Vision 2020. Take care, everybody. Happy trading.